Okay, so we've started this slow consolidation pattern here. I mean, we just haven't been moving up and down. Volatility is just dropping to absolute minimum, and obviously we simply had a 3 point range. I'm essentially going to treat this entire day, these 2 days, as one day. It doesn't make sense to treat it any other way. So when we look at the chart, first of all, the zones are smaller from Friday. Why? Because if I put 2 point if I put a 2 point zone at the top and a 2 point zone at the bottom, then they'll overlap each other. There's no zone there. So simply marking off Friday's high and Friday's low will suffice, right? We're obviously going to break one way or the other. Obviously, buyers have had control. I'd want to stay out of the middle of this and let the market determine which way it's going to go, whether it's up or down. Luckily, we do actually have some econ this morning at top of the hour. We have, what do we have this morning? Monday, let's see, we have flash manufacturing PMI at 15 minutes after the open, and then at the top of the hour we have existing home sales, which I imagine may be a catalyst for some kind of movement. But the first thing that you want to prepare yourself for when you're coming into today is that the market is not moving. So I've already gone through the concept that I may not even get a single trade in ES, right? I hate that idea. I run my largest size in ES, but when you're trading an account, the mistake that almost every trader makes is demanding that the market pay them right now. Okay, great traders wait for the market to come to them. Retail traders, poor traders, right, simply try to grab anything they can out of the market, even when the conditions suck. And it simply does not get any worse than a 3-point trading range. Your risk simply is not worth it. All it takes is one news event to take a 10-point drawdown, right? But you can end up spending 2 or 3 hours with maximum risk on to make a point, maybe. And that's if you nailed it correctly. So the next thing, and I need to make this absolutely clear to everybody, right? For my scalp traders, if you're taking the scalp into Friday's high, Friday's low, right, and Globex low, realize there's going to be almost no rotation, assuming that we open where we are right now, which is 1953 3/4, right? The rotation down will be very small. Eventually, right, we are going to break this range in the morning in an ugly way. So you can't take the. So what I hear a lot of times is feedback from traders, which goes two ways. First of all, they go, well, I took the trade into Globex low and Friday's low with a 2-point rotation, and I'm not going to trade anymore because I just took a stop. Okay, so if you take a stop with a 2-point rotation or 3-point rotation, if you take a trade with a 2 or 3-point rotation, and you know that you will not continue trading after you take that first stop, my suggestion would be don't take that trade, okay? Because sooner or later, the range is going to expand, and all it would take would be just one little small algo to push you past and to take your stops out, okay? So trading at those levels has been very profitable the last couple of weeks, but if you usually what happens is people watch and watch and watch, and then they finally get up the nerve to trade it, and as soon as they do, that's about when the range expands, and we're due for range expansion. Okay, so let's talk about how we're going to trade this, since this was a bit odd. The area that I'm considering the zone below, this 1949, and essentially, let's make it a quarter. Okay, to 1950.50 is the zone. There's an open gap sitting right there. And essentially, if we'd had any realistic range, we would have closed that and or traded there on Friday morning, actually, is where we should have pushed Globex low down to. We've been unable to do that. My guess is the first time in that would be a great place to find responsive buyers and get a push back to the and get a push back up to the upside. Hold on one second here. And then above here, okay, realize as soon as we clear that 1955 and 1955.50, let me adjust that. Okay, as soon as we clear this 1955.50, we are into new highs. Now, Globex high actually had we had the very helpful action of having Globex high push up to 1959.75. I was hoping we would actually trade up here in the morning. So what I'm going to do is actually adjust this zone. I'm going to remove that 1960 to 1960, 1960 to 1962.25 area completely, and instead the zone will be 1959 to 1959.75. Essentially, the only place I'm interested in shorting it is right up against that Globex high. Okay, and it has to get out of here quick if you take the contra trade. Excuse me. It has to get out of this area quickly, okay, because there's nothing up here besides those overnight highs and that overnight resistance, okay? So what is it that I'm going to be watching for or be concerned about this morning with the range being so tight? First of all, open drive higher or open drive lower. So open drives, let's go through that again, because while we haven't had very many of them lately, they cause a lot of damage when they do occur. So the easiest way to identify open drive higher or lower, 3 bars, 1, 2, 3 bars. First bar is either the high or the low, right? Tends not to get penetrated. And additionally, there's almost no counter rotation. So obviously we won't be able to identify there's no counter rotation because there's been almost no rotation at all in the recent market. So that part's gone. The next part will be is there gap fill? And since we're opening pretty much at the open gap a point away, right, that's also not much of a help either. So really it's going to be the straight drive up or the straight drive down, or one single bar that moves this way or one single bar that moves the other way. So the other part of this is that on the open drives lower for the last couple of months have generally been met with this type of pattern. Let me move this a bit so it can be seen easily. On days when we've had drives down, we've opened, we've come down like that, come almost all the way back to the high, and then rolled over between that 9:30 and 11 a.m. period of time. That's what most open drives lower have looked like. Most open drives higher have looked like this, where we consolidate a bit, and then we start doing this, and then either in the afternoon we either have a failed open drive higher, or we end up with a true trend day up or balance day. So my guess is we're due for a break out of this range. We've consolidated for 2 days, and we've had an incredibly tight range. It wouldn't take much to get a move out of range. So my guess is we're due probably for a move. Obviously, if we were going to guess, to the upside is the easiest side, and if that were the case, I would expect a move to this 1964 to 1966 location on the upside. When I get here, remember, everything above this point, okay, is a new high. I'm looking for 1 minute tick divergence in this area to take a short, and I have two choices when I'm up here. Shorts have been difficult at the highs, okay, and it's for two reasons. The first reason is it creates a considerable sum of anxiety when you're shorting at new highs and you've got nothing to lean against. It makes it very hard to stick in there for the full 15 to 20 minutes to let the trade work. Number two, you know you're not leaning on anything, and then the other part is how quickly will people step in underneath and snap it back to the upside? Okay, so while I will be looking for a short here, I really want to be able to get my first scale off in 15 minutes. The other problem with shorting lately, right, is it has been taking forever to get a break. So how do we handle it after 15 minutes? Well, I've already decided. At that 15-minute mark, I'll move my stop down to whatever the swing high is. Okay, after 20 minutes, I'll probably move my stop to break even and let the trade go, meaning I'll just take the trade out with wherever it is. There are adaptations on that. You can take a portion of it out and let the rest ride, but the point being is the shorts simply have not been the easy way, and we're highly likely, I'd say actually this time after 10 a.m., to go into a balanced scenario as opposed to a vertical scenario where we're moving up or down with any kind of meaningful measure. Also, really important to watch the NYSE tick. We have had balance for 2 days. One of the things that will definitely give us a clue as to whether or not we're in balance again, let me insert this real quick. How am I doing on time? Doing all right. Okay. Very simple. Minus 500, plus 500. Okay, as you can see, we've been here for days. okay, this plus 500, minus 500, what are the key elements to a balanced day? Okay, with the exception of this run here that we had at the end of the day, and this was Fed related, right? For the most part, new lows get bought, new highs, if we could get them, tend to get sold, okay? So, and we tend to constantly push back to the middle from both ends of the range. So I'll be looking at the NYC tick this morning. If after 9 or 9:15 or 9:30 we're still at plus or minus 500, I'm going to know we're in balance. How does that become helpful or useful? Well, this is how that becomes helpful or useful. Occasionally we can break balance and get directional at the end of the day, but it's rare. Usually what ends up happening is, let's take this day here. Let's say you stayed short all day long, and then all of a sudden it finally breaks to the downside, right? And you go, woohoo, I think it's going to go to 0. I've just nailed it, right? Then we get to just over past negative 500, and what happens? People step back in, and they drive it right back into the range, and we're left there crying. So the way you use that to your advantage is, as soon as you see range extension, you see the tick get fairly negative, like negative 500, that's when you go and you pull that trade in, and if you can get trade location, you try to take that trade to the other side. I'm not a big fan of trying to do that myself. I'm not very good at flipping the trade immediately, but I have coached those who are and actually have the mental flexibility to flip it on a mental day, on a balanced day, be able to flip mentally and just go from being short to being long immediately without thinking about it. That's great if they can do it. I'm not so fantastic. I pull it off every once in a while. The other thing that I'm noticing is, even though we had some overnight range both in NQ and DS this morning, we have we're actually opening negative on NQ and near the bottom of the range in ES. So keep in mind the bigger picture, right? And the bigger picture is this. Well, heck, I can just go back to that volume profile. We've extended up a long way with almost no down days. The last down day I can spot that was reasonable in size was right here. Everything else has been up. All of this has been up, okay? And normally it is not outrageous to expect the market to come back 50 to 62%. If we take it from our swing low to where we are right now, let's see where we're going to get, where we're going to build that. We have two areas to build that from, okay? So I think we can measure safely from here to here. Okay, and that brings us up just under 1900, right? Which would be the bottom. Interestingly enough, right? That'd be the bottom of that, the top of that window from where we gapped. Okay, would give great long location if we got down there. I don't expect that today, right? And then just below that, 1882. If we measure from the bottom of the window, top of the window, excuse me, where we are right now, right? That brings us up to 1926 and a quarter, down to 1919. So I would expect responsive. I would expect a responsive buy in this area the first time down. That's more reasonable, and we could hit that sometime this week. I'm not looking for a correction. I'm not bearish at all, but markets go up and down, and we've just got more and more grinding. So when we do finally break, the break should be a one-day wonder, right? And then the other thing I want people to keep in mind, okay, the first time it breaks, they tend to be ugly to the downside. And the only reason I'm preparing you for this is because it's just been so long since we've had any meaningful move to the downside. So I want to remind everyone what they look like. Okay, so, and I'm going to say, right after I do this, I'm going to save this and post this out to everyone who needs it for the TradeStation platform. I'm sorry I haven't done that yet. Actually, let me get my Skype up because I don't have it up yet. Okay, and I will get that out in Skype in just a second. Okay, so what does that look like? Well, let's go actually just find an example here. Will be much easier than me trying to screw around with the chart. So I have my example right there. So it's going to look one of two ways, okay? This, by the way, is an example of where we were in balance. That looked like we were going to break from balance, right? It was a balance day. They snapped right back up and pulled it right back in. If you'll notice the next day, this is what I meant by we ended up with a open drive lower. However, notice in the first hour, they held it up really, really well. Even once it broke, we were still in balance. They tried to bring it back to the middle, and that's what provided that entry to that trend day down. We'll pretty much know if we're getting this. It won't be very hard to see. This is also categorized by lower highs and lower lows, all within the first hour. It ended up creating a waterfall scenario. You'll notice we had a gap down first, and the prior day, where we were unable to fill the gap, and you'll notice the following day we were unable to fill the gap to the downside. I don't think we're getting the downside gap. There's an exception to that rule, but however, that because we have econ at 9 a.m., if that econ is weak for some reason, it could end up being a delayed open drive lower. So look for this potential right here. That's what triggered this, was econ at 9 a.m. was what triggered that move lower. So look for something like this and be aware. It'll be one day down. However, has been the pattern for many, many months. Usually they've been one-day patterns, okay, and the next day has provided fantastic location for moves back to the upside, okay, and that's repeatedly been the case throughout. I'm not overly eager in having to catch the short or having to push my short one direction or another. We've been constantly finding responsive buyers. I would expect the same, even if today is a trend day down. I would expect responsive buyers to come in the following day and the easier trade to be in that area. So let's go back to the chart here real quick. Now let me make sure I have the zones correct here real quick. Globex high. And since that's Globex high, actually let's change the color here so it's easier to identify. Friday's high. All of this runs into each other at Globex low. Gap fill, by the way, is right below here. I mean, there's a 3-point range, so there's no point in worrying about, in my opinion, about gap. But this is Globex low, Thursday's low, Friday's low. I mean, I'd want to see a snap out of this thing really fast if I took this as a scalp in this area. I'd want to see a snap out of here really quickly. And then the area really I'm looking for a response is really in this 1949.25 to 1950.25. The other thing you'll notice is I did make the zone smaller. I had no choice. The ranges have been smaller, right? So the idea with the 2-point range is it's a small percentage of what the larger range is, but we've collapsed to 5- and 6-point ranges. So I've had no choice but to bring the size of the zones down. I will expand them as soon as the range expands as well. The areas I will be taking trades, let me cover this really quick, by the way. This 1944 to 1946, first time in, I'll take a trade here, and then again at 1940 to 1938. Again, that's a significant rotation down from where we're trading. I would not expect to get below this 1938 3/4, and I will be looking to push my trades back to the upside out of both of these locations. If we do get below, all those zones below, I will take longs the first time, except this 1936.25 to 1934 3/4. I need to be really clear here to everyone who's listening. This is not automatic. That does not mean I will not take a trade here. Okay, it's in the middle of a generally poorly auctioned area. I need to see 1-minute tick divergence or price action. But just to be clear to absolutely everyone who's listening, I may very well turn around and say I'm taking a long here. I still expect the zone to provide a pause and a counter rotation. It simply means that when the range expands, when we get into areas like this, these are candidates that can potentially have zones. They get broken more easily and without a substantial rotation than the zones that are outside of these poorly auctioned areas. So just that everyone's clear, while this is not automatic, it does not mean that I will not take a trade here. It simply means that I do not have a limit order sitting there to take the trade. I will base it off of price action. Okay, the way you have to work that into your trade plan is you have to decide two things. First of all, are you skilled enough to handle the fact that you may get in here, okay, and deal with the fact that you come in, you take a trade here, it doesn't give you the rotation. If you can't read the price action, you may get stopped out here. Even if you can read the price action, you may get stopped out. This needs to work for me in these areas, both these zones, in 15 minutes. They're both in poorly auctioned areas, okay? This area right here is automatic. These two are by line of sight. This one's automatic. I'll take a trade in this zone, okay? And same in this area. So I hope that was clear. I don't have a better way of describing how I'll handle that, right? The other thing is that moves have been getting strung out due to the lack of participation, and a lot of reversals have been coming at New York lunch. I generally hate New York lunch to trade. And so it won't be a shock if I just simply skip over that particular trade over New York lunch. I may miss the reversal. It's completely possible that that happens, but this is summertime, and I'm not overly worried about capturing every trade. I've never had a summer where it turned out to be my most profitable time of year ever. I actually end up with a pretty high percentage of win rate, close to 80 or 90%, but generally speaking, the reason for that is because I'm taking fewer trades, and the trades I am taking, I take my profits relatively quickly, and I would go off and do something else the rest of the day. So I just don't want to frustrate myself trying to squeeze lemonade out of a dry lemon, and that's essentially what we've got here. Okay, so let me get this out to everybody here real quick. One second here. 623. Give me a second, guys. I'm going to have this out to everybody. Okay, I think I got everyone who needs a TradeStation file. If I missed anyone, please send me a message over Skype or an email, and I will get that to you just as quickly as I can. One second here. Okay. And if anyone else needs it, let me know. So let's go look at NASDAQ really quick, because it's actually been the better trader the last couple of days, and see what we're dealing with there. We'll have so bring NQ over. Okay, so obviously on Friday we ended up with a trap trade that triggered right here on NQ. It gave us our roll to the downside, and that was it for the day pretty much. That was the only trade to be had. In my eyes, you could have taken the long side, but like I said, I'm pretty much one and done in this situation. We're in balance for the last couple of days, so the real key critical areas on NQ today, by the way, so let me go ahead and I'll post this out as well so everyone has it. So this was Globex high at 38.07 and a quarter. It was actually quite a nice extension to the upside overnight. It would be really nice if we get a move up here. I will take a scalp to the short side first time in here. The risk or the danger is that this is a new highs, and in that case we have a potential for open drive higher. That would be the only reason I would wave this off, but I do expect to get a counter rotation. If we get that, it will be key. If you take that scalp and you leave a trailer, it'll be key to get back below 3802.50 in order, and then of course below 37.99.51 to get a move back to the downside. NQ has been weaker than ES. However, right, look at the bigger picture. Let's do that really quick here. I can do that easily. Okay, it's weaker only relatively speaking. We're pushing new highs. We have higher highs and higher lows on an hourly basis. There's nothing in here that tells me, hey, run for the hills, watch out, be scared. Nothing at all tells me that. So there's a couple of trend lines that I would have marked off here. First one's this right here. When we get down into this area, I would expect responsive buyers the first time. And then when we break that down to a 15-minute process, same thing again. So it looks something like this right now. So this one being broken wouldn't be a big deal. Obviously this filling in right here, I would expect just on a larger time frame. First time into this location, down to here, that 37.60 to 37.55. I would expect responsive buyers. The same thing right in here. Okay, and so my first question is, what's half back from this swing back up? And that would be, simply put, that will land us just below 37.74. So again, I expect responsive buyers the first time back in. Let me get rid of this here real quick. We don't need all this stuff. Okay, I would expect responsive buyers somewhere right in this area first time back in. Now this is key. I want to show you something. At the 61.8 retrace, it's incredibly poorly auctioned. So if we don't come off of this 37.74 3/4, my concern would be that we would sweep straight through and could sweep all the way down. Didn't mean to do that. To this area. So this whole thing is poorly auctioned. Same thing below 37.86. From 37.86 until we get down to 37.76, I would not be taking a trade in between those 2 points, right? Very slippery. The other thing to remember when there's a lot of slippery areas in between is that what falls through easily one way can fall through easily the other direction as well. And so I watch out for that in terms of taking counter trades. Also, be alert on your charts on ES. Let's go back to a 5-minute here. Okay, the key rotations I'm looking for are 15 and 30 from prior day's close. So obviously from 93 sets us up at 63 as being the first location as a 30-point rotation lower. Okay, so that would put us right here and just a few points in front of this support zone that's right in here. Okay, remember the support in NQ can get much more volatile than it is in ES. It doesn't have the same institutional participation, but I would look for a responsive buy somewhere in here. This is also that, again, critical area. And then 30 up from here, if we get that, is going to put us at 23. Okay, so just be aware, again, that's an outer space, so to speak. But when we get up there, just realize we're up 30, and that's been about the extent of the stretch we've had for the last couple of days. And I would have that marked off on your chart as well. Other than that, that's it. I'm looking for the traps this morning. I will expect that we get some kind of setup going into the housing data. And my guess is, I mean, bulls and buyers have been in control this entire time, that we continue to get that push higher. We're positive on both. It's a flat open. But I would expect to push up actually this morning simply because they've been pushing up every other morning. If we get something different, right, we see an open drive lower, we'll be aware that we need to change our attack on the market. I'll be looking for a trap at Globex low, prior day's high, right, and also below this 38.02. I'm more comfortable, by the way, if we get to this 38.02, seeing it if we close below this point. My concern would be if we trap here that they'll just come in for a backside test of the high and push back up. So right now it's not an issue because we're not opening above. If you take the scalps in NQ, They have been responsive. Just realize we're in a thin market and we're due to break one way or the other. Anyways, guys, if you'll give me just a minute, I'm going to stay live through the session, but I need to step away for about 4 minutes, and I will be right back. I'm going to switch back to the other screen here real quick. There we go. Okay. Hey guys. So I don't let me get my charts copied over here real quick. So we haven't moved into Friday's high. We haven't moved into Globex low yet, and just a matter of, I think, what's going to be an incredibly slow waiting game. Ron got it. Sorry, I apologize. There you go, buddy. Guys, if for those who get the TradeStation file, if you don't have it by the time I've started that meeting, please hit me at 7:45 to send me a reminder. Okay? I do not mind over Skype. So there's econ at 15 after, and then there's econ at the top of the hour. Pushing lower a little bit. We're right on that trend line from NQ, right down here at 37.90. Again, the key on the the key on the slow day is to nail it when it gives you that one opportunity, and not get in a position where you're having to bail out of a hole, and certainly not digging a hole on a day like today. And the urge I have to resist is simply making the assumption that we are going to trade higher and just not taking it off the open. It's a terrible habit to assume. I find a lot more comfort in knowing that I'm sticking to my trading rules than just simply trying to grab something in the thin market. Even Friday, it gave me an opportunity to make money. So the goal is to simply wait until it gives me that layup, and if it doesn't, or at least that clear entry, and if it doesn't, I'm okay with that. And that's the key to going from being boom bust to being consistent. Most professional traders, I mean guys who are trading huge positions for hedge funds, most of those guys are looking on a day trading basis to capture 1 to 2 points max. Right? They're not sticking around for 10 or 15 point moves. As they get them, that's nice. But most of those guys, the guys who are grinding it out, they're grinding it for 1 or 2 points, and they're very happy with it. Come on, see him move into the lows. Remember, have a plan. If you're taking that Globex low, have a plan on that trade. They stepped right in front of it. I want NQ, but yes, this is what's being offered. I'm going to try to grab 1952 and a quarter for a scalp. Stop is essentially 2 points. So no fill so far. I may have waited a second too long to make that decision. So I'm sitting at 1952 and a quarter. If they give it to me, that's great. If they don't, that's okay too. Long 1952 and a quarter, 2 point stop.
Order filled.
And again, one of these days this range is going to break. So if you're following me on this, right, I'm aware that I'm going to get busted on this trade one morning. Okay. Bear in mind, we have not hit Globex low on NQ yet, so technically ES will be leading us to the downside. This is by far an aggressive trade with such a small rotation. So the other way to trade this is obviously for the trap back to the upside. You could argue almost open drive lower at this point, except that we have a 4-point range. Again, NQ has been unable to get into Globex low or prior day's low so far.
Order filled.
Again, 6 ticks is my first scale on this. Which fits at 1953 3/4. And keep pushing up towards the highs. Come on, guys. Just need a little push. New highs on NQ should do it. Damn, I wanted that move into lows on NQ and give it to us. Funny how disconnected the markets have become between ES and Q. One day ES is weak, NQ is strong. Next day NQ is strong, ES is weak. They're just bouncing money between the two. Wow, we're actually struggling to get 6 ticks tells you a lot. Yeah, apparently so. Adam pointed out that 5250 is still a big deal. That's still the breakout when you look at a larger. That was where we where we rejected out of the last time we got up here. So we're dancing with that for right now. So hopefully we can manage to get 6 ticks above. They're not making me feel incredibly hopeful. I hate this price action. And we've got 15 minutes until the econ that actually matters. Okay, guys, the fact that we were unable to break makes us highly likely to come back and test this downside scenario, which really sucks, which means it'll tag me out. There was no lift, and now NQ is back on the other end of the range. So there you have it. We first move up and first move down. That's unfortunate. And that puts us right into the top of the next zone. I didn't think about that. 52.50. If I put a 4-point stop, that puts me at 48. That means they have to take me through this open gap and through this structure. So I had to debate between taking a 2-point stop or a 4-point stop here. Let me see. I do not like this at all. Let me think through this. Realistically, guys, you're likely to get stopped out and get popped right back in because that puts our stop right at the open gap, and that's what I was concerned about, having that low where it sat last night. So something to think about. I think I'm just simply not going to move my stop, and I'll deal with it later. I don't like where we're sitting, but I don't have much of a choice. The top that was closing the top of that window is all it was we're bouncing off of. And I have no way of knowing. And that gets to be the difficulty when we get these ranges smaller and smaller and smaller. So it would have been nice if we could just gotten that pop up to 53 3/4. The fact that we're having a hard time getting 6 ticks is really disturbing. I don't want to move my stop. I said it was at 2 points to begin with. But it is right at that open gap now. For better or for worse, I'm not going to move it. It's 2 points. And this is exactly what I was talking about when I said it's hard to take those scalps and hard to know which one's going to work and which one's not going to work. And we're highly likely to close this gap and push back up. My only choice would be to move it back 4, but what I find happens when I move my stops after I've set them initially is I get stopped at a larger stop instead of the smaller stop, and then I have difficulty taking my next trade that lines up, right? So that's why I'm not going to move this stop. I'd rather just wait for my next setup and take the 2 points instead of sitting here and agonizing, which is exactly what I'm doing, is agonizing over the stop. Does that make sense, everybody? And you see, okay, and so, by the way, guys, I want to make clear, when I'm going through what I'm thinking emotionally, does not mean I'm ready to bail out of the trade. Unless you hear me say I've closed the trade out or I've stopped the trade, okay, I'm generally going to stick through the trade. What I'm trying to show is that even though I have a trade plan, even though I've gone through all this preparation, what I'm trying to show is that I still go through these emotional swings up and down. Most traders do. Most professional traders do. Most retail traders do. The difference is I fall back to my trade plan. My trade plan says, A, don't move stops, number 1. So I've already committed to the stop. I made a decision when I entered that it was for a scalp, because that's about as much as I was willing to risk. That should get a reaction off of that level. Okay, now you have 2 choices. We've been in for quite a while. if you want to cut the trade out early, that's fine, but 2 points is not significant enough for me to wig out over, which was by design, right? And really the emotions are coming up because of the disappointment of being unable to get a massive 6 ticks out of this trade. So I'll just simply wait it out. I don't want to get stopped, but it's quite possible that I could get stopped. And my other choice, my third choice, is to simply wait until the range returns in ES and I can get my proper rotations for my trades. Again, this is part of a result of we have very narrow ranges, and it becomes very difficult to see, are you going to wait for your proper entry, or are you going to take something that the market's offering but it doesn't look as attractive? And that's exactly what I'm stuck with right now. So hopefully 53 3/4 pops up prior to the econ coming out. I can get my scale. On my scale, I will move the stop probably to, I mean, damn, the ranges are so small. Probably that 51 and see if it holds, or 52 1/4, leave it at break even and see if it gets lucky. Come on, let's go. 53 3/4. Let's do this. Yep, that's the problem. That's a nice little point. JT pointed out that I was looking for 1950 the first time. I base that off of the price action of what I was seeing visually, JT, so I do adjust. That first move is a scalp trade for me. Okay, so guys, you'll have to distinguish. There's 3 distinct trades. There's a trap trade, there's a scalp trade, and there's a zone trade. As far as the zone trades are concerned, the first area I'm looking for, or was looking for, is 1950, 50. Okay, so I've got different traders with different skill levels all the way through this, right? And then I've been doing this for 20 years, so there's a lot of trades I take off the fly. That's the difficult part of trading live, right? So I have 2 choices: either don't tell y'all I'm taking the trade, which I don't like doing. Then I have to think through, which ones I'm telling you about and which ones I'm not doing, or just simply call it as I'm doing it, right? So what I wanted the first time was that 1950-50, and I'll probably have to stop, turn around, and reload right after getting stopped. But that's okay. Scalping is a different art than the zone is. Okay, so JT, if you're focused on the zones, right, no trade is triggered. Okay, the idea isn't for me to call out a trade and have everyone just simply follow on my coattails. The idea is for me to be able to teach y'all what I'm looking at in real time and what I'm doing in real time so that y'all can learn. But the first step in that is understanding, A, what is the trade? This trade I'm taking right here is a scalp trade into Globex lows. Okay, the Friday's low and Thursday's low, everything kind of accumulated all at one spot there. Okay, the first zone trade will be 1949 1/4 to 1950-50. Okay, and I would take another trade there if I get it. The idea was prior to news is that we were going to come in, take that 1952 back up to 1953 3/4. I could take my scalp out of that, or at least take a portion of that scalp off, right? And then be ready to reload 1950-50 to 1949 1/4. I may not get that, and so that just comes with experience and realizing that you will see me take a stop, right? And then turn around and go, this is a zone trade. I'm taking the zone trade here. Okay, so they're distinct in how I handle them. Hopefully we get filled here in just a second. Not yet, come on. Filled, 1953 3/4. Anyone else get hit? And I'm moving my stop up on that, by the way, to break even to 1952 1/4. Good job, Micah. That was uncomfortable.
Order filled. Order filled.
So let's see. I moved my stop on the second half of this trade right back to break even, so they could just take me out on the econ data or before the econ data, either way, and that's fine.
Order filled.
Stop 1952.25 on balance. So guys, do you understand the problem with someone just said we did just get a B grade trap? Actually, we got a B grade. Ron, actually, now that you mentioned, yeah, we did get a B grade trap. Okay, but look, here's the deal. Okay, and I'll go through this right now for everyone so y'all can see. Yes, we got a B grade trap, but guys, you gotta, okay, when I do say put a stop behind the swing, I mean put at least, you got to give it some kind of room. If you're going to give this literally 2 ticks, that's fine. I'm all right with that. But the range is less than 4 points. I mean, I'm not trying to get y'all. This is what I mean by a tight range that sucks. Okay, the whole range from Friday was 3 points. If you're trapping here, the goal is to get to the other side over here, 1955. So I don't have a good way of it. I don't have a good way of explaining that, but you've got to be able to go, hey. One of 2 things. If you're going to trade it, like I just did, right? The frustrating thing, I put a 2-point stop on the move into Globex low. Okay, and I became, not only that, but I became convinced, as I do almost every time, that I'm going to get stopped. You notice I did not move my stop. Okay, you've got to decide what an acceptable amount of risk is, and you've also got to be able to look at the market and go, I have a good chance of this trade working. But if you're taking the trap here, okay, and you're putting a 1-point stop behind where you entered, which is essentially 1951, okay, it's not enough room on NQ. The average rotation is still 4 3/4. I know the range is tight, okay, but I don't have another way of explaining that other than to say don't take the traps until we go back to an 8 or 10-point range. I don't have another way of explaining that to you guys. So the range sucks right now. There's nothing we can do. It's summertime, right? We're getting stopped on nonsense moves in both directions. Like I just got stopped at 1952.25. Why did it go back to 1952.25? I have no clue. The tick is plus or minus. We're 250 to plus 400 at this point. It's pitiful. So I'm trying to express as easily as I can. This sucks, right? Like if you had to grade this is. I don't think there's any ladies in the room. If there are, excuse me, but this is the fat chick at the bar at 2 a.m. That's what this is. We're trading to ugliness because there's nothing else left to trade. So I hope that makes sense to everybody. I'm not trying to be harsh or anything else. The stop does call for a stop below swing low, but we got to accept when we're in a tiny range, right, that things are going to happen that are going to suck, and it requires more patience than I would like to give it, right? So, it's not like I exactly printed a fortune this morning on this trade. I do want to see how. If we can get oil down to 105.90, I'll have a long there. Jerry, I apologize, guys. So sorry. But thanks for the heads up. Nice job. Okay, and there you go. That's what I was waiting for. We didn't get it. I moved the stop up to break even. C'est la vie. That happens, right? So, right idea, looking to the long side. I don't want to short Globex high. Why? ES has been driving to the upside consistently every single day. Okay, if I want to take a trade, and by the way, the data came out, right? So, on NQ, excuse me, right? We have not gotten up to prior day's high or Globex high yet. So I'm just going to sit tight. It would have been nice to get that trailer on ES. No problem, Adam. I understand, man. That's just not my trade. I'm not even going to repeat that. Wow. Yep, Jackson, I agree. And that's on econ. This is the best we can do on, this is really rough trading, guys. And I got a feeling a lot of it just simply has to do with the fact that we don't have anyone in London helping us out at all. I'm pretty sure those guys are all getting drunk every single night watching soccer. Jerry, that may not be a bad idea, brother. So I'll stick around for another 15 or 20 minutes to see if anything happens. But basically, I'm looking for now is for a move down to this 1950, 1949 and a quarter, possibly, or move up to this 1959. 1959. Why do I have that so tight? Oh, Globex high. 1959 to 1959 and 3/4. Is that right? Wow. Excuse me just one second, guys. That's just where I showed the last little bit of, that's just the last place I see where we have some structure. And I'm just assuming CL is long through here. We're due for a pullback, but that's the bottom. That's essentially where we end. We're poorly auctioned right down to that point. So I would expect some responsive buys between that, really all the way down to 105.80 would be my guess. Say 105, is that right? 80? Yeah. So 105.90 to 105.80 will be where I would expect responsive buyers. They may step in sooner than that, just because if you look at the 50 retrace on that, we just passed the 50 to 62% retrace off that last move up at the close on, wow, what was that? Thursday, I want to say. Was it Friday? Was it Wednesday? Excuse me. So we're just at this. What I have is I use a modified retrace, and so hold on one second here. I don't have that all the way down here. That's incorrect. I stand corrected. Hold on a second. We've actually exceeded it at this point. We need a 15-minute chart up here. That's still where the first place where we have structure. But let's see where the 50 to 62 retraces on that. And that brings us just past the 62 retrace with a proper draw, and with an improper draw, I still like that 105.80. That 105.90 to 105.80 area is pretty sweet, and I'm pretty much willing to wait for it. So we're actually at the 50 retrace on a normal draw from where we broke initially from that last move up. If everyone sees that or wants to see it, I do not recommend trading crude to almost anybody. It's very hard. So right now we're sitting at 50 back. My guess is eventually we'll make it to that 60, just past that 62 back, to that 105.80 to 105.90 area. Could be wrong on that. This is also, if you look behind that, if you don't go according to auction market theory, if you look behind this area, this is right where the top of structure was, meaning 106.30 was right where the top of structure was when we broke out, but we're poorly auctioned all the way down to 105.90, 105.80 area. So I'm going to be patient and wait for that and see if they give it to me. I've certainly got the downtrend to help me. Make sense? No problem. Yeah, Harry, I'm not going to, I mean, I'll pull over my CL chart if you want, but I don't want to confuse everybody. I really want to keep the focus on ES and NQ in here, but here, since there's nothing else going on, here you go. This is what I'm waiting for down here. We're poorly auctioned all the way through here. Okay, so there's nothing that says we have to get back here, but if I'm going to wait, this is the area I want to wait for. We've fallen out of this channel, so my guess is we'll come back into this channel and possibly follow it down. We may not hit it till tonight or tomorrow, but I'll be patient and wait. They'll give me an opportunity to get in. But they're still pushing on this. If you look on a bigger time frame, you can see the same thing. Although, interestingly, we did trap now below. We gapped above this 107, 107.20 area, and we're now trapped. So that's pretty interesting, right? We do have potential all the way back to this, into this 105 area, potentially. But for right now, for today, 105.90, 105.80, that'll be the first stop, right? And then you think we want to come back and retest this 107 area. Anyways, that's it on the CL chart. I don't want to turn this into a CL trading room. CL is hard as hell, and you can rack up losses really, really fast. It's not nearly as easy as guiding people through on ES. Notice NQ is now coming down towards the lows, guys. Okay, so the first thing that the trade action tells me, what is it? First of all, ES and NQ are completely disconnected, right? Usually the markets have some kind of semblance, a structure where they're working with one another. Earlier, NQ was hitting the highs, ES is hitting the lows. Now NQ is trading near the highs, NQ is trading near the lows. So there's no semblance of structure, there's no semblance of organization. This is just random orders being pushed through with minimal participation. Okay, so we've gotten our one trade. We've now rejected off that 1955.50 exactly to the tick. I did not take the short side because short side has not been working. If I'm wrong today about that, that's all right. I can live with that. And NQ, again, ultra thin market pushed up to 38.07 overnight. So I haven't gotten a trade there, and I haven't even gotten a trade off of 37.99, which I'd actually be willing to take now if we could get up there. I'd actually be willing to take that trade. But 37.96 3/4 is the closest we've gotten, right? And we're pretty close to an hour in the day, so I'm going to stay on for another few minutes. Anyone's welcome to ask me any questions, but I don't think I'm going to. Actually, I know, Mari. I realize that I'm just chatting up CL because nothing else is going on. So I'm not encouraging anyone in here to trade CL. It takes me a long time to trade people to trade CL profitably. You can lose your ass. It's a thin market. Know what you're doing before you trade that market. It's 1/20th of the liquidity of ES, if not more, and probably 1/5 the liquidity of NQ. So be cautious if you're trading CL. It's a hard trade. Okay, they rate people on the stops. CL is yet to push down into that low, and it's been so long since we've opened, right? We're 9/11. I'm not even sure how strong a reaction we'll have off of the scalp into Globex lows. So be aware of that, right? We're coming right up on it. 86 is the area if you're going to take a scalp, okay? Just be prepared for it to rip right through you. Don't be shocked, okay? That's the caveat. It's not a clear layup. It'd be much nicer if we just hit it out of the gate. So at this point, if you look at the formula, right, we failed to hit even Friday's high at this point, and we'll come in for a test of Friday's low. Tick is plus or minus 500, and let's see if we can get an algo to fire to take us just below and trap us back above. That would probably be the best scenario. Yeah, I still will take the trap if it takes place here. I mean, that's just been the MO of NQ here lately. As we come close and we miss 37.96. Hold on, I need to do a calculation real quick. That puts us at really 37.82 would be ideal location wise. Let me go see what structure looks like there. Lord, I can't even see there. And we actually have structure right there at 37.82. So 37.82 would be ideal. If you take the 37.86, right, just realize, and of course we missed it by a tick, realize that stop behind there, the 5-point stop I usually use, will put you just behind that 37.82. You could get tagged down on your stop. This, again, is a risk of just ultra-tight ranges that we've had here lately, guys. But again, now it did come within a tick, so to answer your question, JT, no, I probably would not want it unless it trapped. Okay, so, and at this point it has not trapped. Again, the price action just sucks. And if I'd gotten 37.86, I'd have already been scaling probably 50% of it right here at 37.90. That would have been a 4-point rotation. So I didn't get it, is the bottom line. And we're just chopping, you know. And again, looking at that plus or minus 500, we just needed a little bit more of a push to get a trap there. I'm not expecting a lot for the rest of the day. Is there a big match this morning on the World Cup matches? Because that'll determine a lot of how early the European guys leave. Yes. Oh, there we go. So Australia plays Spain. That's probably going to be a decent draw. Is Chile any good this year, guys? Well, yeah, Mike, in Europe, soccer's like the biggest sport on the face of the earth. Like, everyone leaves to watch the World Cup. World Cup's cool. I'm not even the biggest soccer fan in the world, but I'll take time to watch the World Cup. But the point is, that is important about the World Cup is, that's the reason why you're seeing such crummy action overnight, even on what there is because most of those guys are, half the big traders are on vacation. They're not showing up for work in Europe. And so we end up with these tiny little ranges overnight, and it really screws our ability to trade well over here during the day. So at any rate, we have a 4-point range, guys. I'll stay on for 5 more minutes, and then I'm going to drop because I'm bored to tears. I just would not be taking risk in this environment other than the few scalps that I saw. And again, all I'm looking to do there is just literally that, scalp in and out of the thing and move on with the day. So 37.86, we couldn't push into the low. I was willing to take it there. I guess I should have gone a tick in front. But in a normal market, we would have pushed just past that. It would have given me my entry right there and pushed just past. So not a big deal. I can't tell y'all how important it is not to force trades when it's slow like this. It's really easy to dig a big hole, okay? And the entire goal, the only goal is for me is to get through this with no damage. If I've made money to boot, that's freaking awesome because when the range expands again, and it will, okay? Range expands again, I want to be prepared for a wider range, which I believe I am, mentally prepared to handle a wider range. And then the second point is I don't want to dig out of a hole, right? If I keep stacking on 1 point, 3 points, 4 points, or whatever the equivalent is in ES, right, with the NQ trades, I'm covering my lunch money at least 1 bean and 1 rice, So, and that's the point of this time of year, okay? Nothing's worse than coming out of summer, and feeling like you have not made any money whatsoever or that you're in a total hole. JT, okay, there's 2 grades of traps. There's A grade and B grade traps, and I might hold a webinar on it. But yes, sometimes either way, I wait for the bar to close, the 5-minute bar, to close above that point. There are times when I won't take a trap trade, okay? And just so everyone's aware, so in my coaching experience, I've now been coaching the general public, I would say, for a year now, and this has been my experience. The gentleman who's best at trap trades has taken somewhere between 2 and 4 months now to get him perfect or to get him down and understand what his setups are, what rotations he needs. There's a lot of exceptions to the trap trade. So the simplest trade that I have is the first move into the zone, 2-point stop behind, 2-point rotation. Everything else requires more work and has more asterisks next to it. If this happens, then don't take it, or this is the scenario, don't take it, or increase the stop or decrease the stop, right? All of those become variables in trap trades, whereas with the zone, I can simply say, look, I'm looking to take the top of the zone. My stop is 2 points behind, and that's that. I can verbally guide through and say I know what I'm looking for, but to explain what I'm actually looking for each time with the trap trade becomes very difficult. They are very profitable. Like, for example, why am I not taking the scalp, or why didn't I take the scalp into 1955? Well, because that's a 3.5-point range on ES, and I don't trust, if I'm going to trust the side, I'm going to trust the long side in this environment and not the short side. Okay, so I'm not taking the scalp. I probably also would be hesitant to take the trap at 1955.50 without trading significantly higher, like up into that 1959 location. Okay, I'd be more willing to take it up here than I would right here. Okay, so that's my point of view. I don't have an easy way of just saying, but yes, in principle, it has simply traded above and then traded below. The other key to the trap trades and staying consistent is to know when to suspend them. And the way I know that is through working on I have detailed spreadsheets that let me know pretty quickly over the last 2 weeks which trades have been working and which trades have been failing. So trap trades on ES on almost all time frames, meaning prior day's high, Globex high, prior day's high, Globex high, first hour high. On all time frames, they've been handing me more losses than average, and additionally, or importantly, they've just been a pain in the butt to make work. And they're responsible for the losses I did have. They account for almost 70% of my losses in the past probably 3 weeks now. So I keep very close picture on my stats, and I'm very quick to suspend trades that aren't working. So I don't know how else to explain that other than to go through it with coaching, but even in coaching, it usually takes me multiple sessions to get someone to be very proficient at them. But once you got them, they're nice. The risk reward is fantastic in most markets on trap trades, which is why I like them so much. They have a higher failure rate than the zone does, so it probably also requires an adjustment in trade size. Okay, they're not as automatic as the zones are. However, the risk reward is fantastic. Usually it can be 2-to-1 or 3-to-1 on the risk versus reward setup. Many times, not always, but many times. So anyways, I think we're just chopping around, guys. I don't see anything else. Obviously, got to give the Bulls the edge because they've had the edge all along. If I see anything else happen, I'll let y'all know. But I think I'm going to have some breakfast, and I'm going to accompany my wife to the doctor's office this morning. So unless anyone else has anything else, I will drop off. I'll give it a minute here. I hope that helped you out, JT. I hate to be so vague about it, but there's not a specific way to set it up. Hey, you're very welcome, guys. My pleasure. Okay, everyone, have a great day. Looks like there's no questions. We will chat later. See you guys.